Welcome to Commodities, and look, not a lot to report, but we can talk about a few things, and one of those things would be the two counts that we've got for gold, and this particular count here is the triangle pattern that may have wave D in place already, and looking for wave E to move up above the, to supply levels around the 1300 there. So with that in mind, we're looking at a sort of a pattern like this here. The circle here is the 50%, 61.8%, but obviously the supply level is, at the 1300 here. So we'll see how that goes. Now, the other count that I've got is that this is just a wave 4 rally here, coming back into the 1265 area, which is the first level within group 2. So the first level within group 2 would be 65, and then we've got an important number here, which is 272. So I'll just put that in orange there, just to just sort of highlight that, and then 280 here as well. So as a wave 4, we were looking for a 38.2 retracement level, which comes in 1266 area, but 1265 is fine here as well, because it's the first level within group 2 here. And the structure that we've got here does fit as an A and a B and a C pattern. However, it could be a beginning of a larger correctional rally as well. So we've got two counts. We've got one count to here that's completed. If this rolls over from here, then we know that we're on track with this particular count, and we would be looking for a 5-wave structure to the downside. So this is the pattern that we've been looking at here. So with this move down through here, we were looking yesterday at this 1, 2, 3, 4, and then 5 up into the 265, 266 sort of area here. Now, to get the evidence that we need here, we would need to see a 5-wave structure like this coming down here. And if that's the case, then we would see a counter trend come back into play here, and then you can look to short here. So you could probably use the 260 as the retested resistance through here. So you'll need to see that pattern there for a short trade setup. Now, if the market just continues just to do a little 3-wave structure here and then push higher, let's have a look at that, drill into here. So currently we've got 3 waves here. This could drop down here and start to create 5 waves. But I was just sort of thinking that, look, if in a bit of a nutshell, until it works itself out and we've got more maturity in this particular sell-off here, if the case comes into place that the 1265, the first level within group 2, becomes support, then to me that is a sign of strength, and we can look to build a long trade off that. However, as I mentioned before, the 272 here, when you get 272 together or 772 together, they've got carry more weight than a normal 72. So there will be, struggling going on at that particular point there. But being able to glean a small position on 1265 and then adding larger positions on top of the 1272 would be the go. So look, as I mentioned, we've got we've got a pattern that's up here that reads as an A wave, an A and a B and a C for the B wave here, and then 1, 2, 3, 4, 5 for the C wave here, which would be 5 waves of wave C. But we just need to be mindful that it could continue to extend. And we just need to get past this junction. That's all, one way or another. So we've got probably a short trade or a long trade coming from this area up here. We just need a session or two to reveal, show us what's going to occur from this point here. So anyway, that's sort of it really. And the silver market's a bit the same as well, in its pattern up through here as in the same pattern as the A, the B and the C here as well. So we wouldn't look to short unless the 1900 became the retested resistance, which is the 50% retracement level, and the 1890s is 61.8. So we'd want to see the market under here, locked under here, or unless we'd seen a really nice clean 5-wave structure coming down from this high here as such, coming down in like this here, and then we've seen an ABC here, and then overlapping wave structures here, then we could look to, perhaps get a position above this number here. But we'd want to see, a clean piece of evidence like this here before we look to short here. So we don't want to trade against the trend. In this particular case too, like gold finding support on 1265, if this market finds support on 1930, the top of subgroup 1, 10, 20 and 30, 1, 2, 3, if it finds a nice solid, this is support here where it's tested, that type of thing you want sitting. It'd be a smaller version than the 1900 because it's a smaller number, but a very important number because it will separate. The orders will drift from 1900 above to the 1930, and they'll all be looking at the next second strongest number 5 here. So the orders will slip in the market depth from here to here to here. So that support there will tell you that that's the picture of what's actually happening in the depth. So you need that support there. The copper market is sort of holding its own as well above the 300 here. Now, what we do know and what we don't know is that the bounce off, well, I'll just say 300 here, $3, it's the major level. You can see the support in there hasn't even reached it. So there is support there, obviously. Secondly, that the pattern that we're looking at here has just about got overlapping wave structures. It would need to take this low out through here to confirm that. But look, what we were looking for was a 4th wave coming back to the 38.2 retracement level, 307. Hasn't quite got there, but that's pretty close. But what concerns me here is that this is just blowing the picture up in the 1-hour chart here. We've got the A, the B and the C here for wave 4, and that could be the case, and we could just work straight down from that, okay? However, I need to be, wave 4s can just double in size, and it's not like this is a big wave 4 anyway, and it's not like it's complicated or anything. So we could put this as an alternative count here, have this A, B, C here as just the A wave, and then we would be looking at a B wave, like an A and a B and a C here for the B wave, and then the C wave up into this area through here. So A and C here will be about the same length before we move down through to here. So this is possible before we move lower. That's all I can sort of say. Otherwise, we'll just come straight down from here. I mean, the main point here is that it's going to place more pressure on the material sector. So yeah, we just need to be a bit mindful about that. So yeah, the oil market. Okay, a bit slow to change there. The oil market, we were looking for wave 4 to pull into place into the 38.2 retracement area through here, at the sort of 104 sort of area. And it's matured a bit. I mean, it hasn't done a lot in since the last time we spoke. I think we're looking for the top here, and we may have even had the move coming down through to here. So we're looking for wave 4. Wave 4s are normally sideways and complicated. Normally they go sideways because they really got to unravel and rebalance the strong 3rd wave out. So this is what it's doing. It's maturing, and it may be getting close to completion. So this is it here, just on a 15-minute chart, in terms of an A and a B and a C wave coming down through to here. So now, if it stays in this area through here and moves up higher from here, then you'd wait for support on 104.50, the midpoint, okay? And you go along from there, and you go to 105, and you'd exit, and you wait for support again. Now, if the market drops down below here or below the 104 or to the 104 and then finds support back on top of group 1, 10, 20 and 30, top of 3, 104.30, and find support there, then you can go along from there. It's got to come down first, test lower, and then find support. That's giving you evidence that the market is strong, and you can run with that. Going long here is not the go, because the market's still pulling to the downside. You can be right 50% of the time, and hey, you probably, if you manage your money right, you'd probably only need to be right 50% of the time. In fact, you'd probably do that at 40%. But it's just good to get the timing right. It saves a lot of stress. The gas market. Now, as I've mentioned before, I'm unclear about this wave count here. This could certainly be down for one. This is a top little area here as well. So it can be down for one, back for two, down for three. In fact, back for four and down for five here. It just hasn't made a new low here. And then we've got an A and a B and a C up here. I don't know. It's just not clear enough to put on the table and say that's that and we'll do this. It's just not there. The current move down here, this is roughly the 61.8% mark of this last swing through here. So I was expecting some sort of bounce off here. We are getting a bit of a bounce here, but it's really sitting flat on there. So it's likely, and it is corrective, so it's likely to drop through. So that 450 is a retested resistance. It's probably still not enough to short just yet, because I mean it could quite simply just come down through here and come back up through here as well. So we need a reference point like this. So we do need that break lower through here, and then we need a retest here. Once that retest is in and you've got this reference point here, then use that to go low, and you can put your stop here. But it's just that this move down through here really hasn't been rebalanced. It hasn't had a correction through here. We're looking at sort of 5 waves moving down through here. And I can see these are sharp here. So these are all wave 2s here, okay? See how these are sideways here? These are wave 4s. So that's telling us that we're kind of getting towards the end of the trend. So this is why I'm thinking you don't want to get trapped here. The soybean market, or the grains now. Okay, it's already moved through. Okay, so we could... Just going back over this count here from the high here, we're looking at 1, 2, and then down for the third wave here, where we're still in that wave there, and then we'll be looking for the fourth wave here, and then a fifth wave down here. We don't have to worry about that alternative count now, and then down for a fifth wave here. So we could be looking down a bit lower through here. Now, in this third wave here, we've got 5 waves, which we should have 1, 2, 3. We're looking for the fourth wave here, and that's confirmed by having the 1465, the first level in group 2 here, 65, 72 and the 80 here, as the retested resistance. And now we're moving down for wave 5. Now from 4 to 5, there'll also be 5 waves in there. So you can see that this is moving the quickest. So this is the third wave. So 1, 2, 3, 4 and 5. Down to 1430, where you'll see a bounce that will probably come back to the 1440 or even the 1450 area here as such. So yesterday, just on the 15-minute chart here, we were looking at this as an A and a B and a C for our wave 4, if you remember. And we've got down here, I haven't pulled this apart, but down here for wave 1, we can put wave 2 here. And this is a nice sort of retest here too, you could have got this retest and had that as the reference point, or you could have had this one here as a reference point after this retest here, or you could have just read the volume and, and gone that way with it. Everybody's got their own way of doing things, and but either way, everything's on track here. So this is just the third wave. This third wave will take us down to 144. The only number that Gann and Fibonacci meet on, but there's not much difference between Gann numbers and Fibonacci numbers anyway. They're so close, it's not even worth worrying about. And better off just drifting towards the whole numbers and even numbers once you've got those ratios sort of intact somewhat. Look, a bounce off 144 back to 1450 and then down to 1430. The wheat market and the corn are still trading lower here. We were looking for the 580 sort of area through here. We're still considering it a wave 2 down to here. If this low gets taken out here, then it's not a wave 2 here. Then all of this here, all of this move up here would be a large wave 4, and we'll have to look at wave 5 coming down below here. being a bit of a trap and reversing after that, because we've got the weekly stochastics, the slow stochastics, moving into the sold area. That gets up. The weekly obviously gets updated, on the close on Friday. So we'll have a look at that over the weekend. But anyway, still moving lower down to 580 area here. In this last little 5 waves here, it doesn't count. It doesn't have the right look and feel on perspective and so forth, this structure here, because yes, we can count 5 waves of 1, 2, 3, 4 and 5 coming down into here, but the third wave really starts to look a little bit small. It's probably roughly the same size as the wave 1, and this is one of the things that actually happens with pretty much the same, so we probably get away with it, but this is the kind of thing that happens at large numbers here. Things get a bit skewed, because there'll be larger orders at larger numbers, so to speak. Anyway, let's just see how this completes down here. And once again as well, this market came down, this is in the bear market thing, come down to the large number, bounce back, move through, and then the normal thing for it to do is to retest that. So a move through here, retesting that, and that's your reference point here, and then down again through here. This retest here should be on lower volume, so if you want to go to the futures market and check that, then you know that if that's on lower volume, then you know the trend is continuing down. The corn market's in the same boat as well, and you can see that it's got its little 5 waves in here, but once again this is pretty dodgy within here, so this could just unfold further through here in terms of down for 1, back for 2, and then we'll look at this as 3 down here, and this would be 1, 2, 3, 4 and 5 down to here, then wave 4, then wave 5. So this is what could happen down here and be drawn down further. The weekly once again is deeply oversold, so I just don't know. Our target was the 440, that's been reached. You could there's probably more to be had out of this by looking at this structure here, unless it's all squashed up into here. I just don't know. I can't really say for sure. Yeah, look, if support is found on 443, the top of group 1, then you know that it can move back higher from that point. But if it can't find support on 443, then it will roll over to the downside here. So it's something that you can keep an eye on if you want it. If you're still short, that's fine. If you're not, you've covered it there, and you can just wait for 440 to become the retested resistance and move down to the next level, the 430, which is the top of group 1. So you're likely to see a bounce there. The coffee market, just the weekly chart, and just showing the slow stochastics here as well. And this is the same for roughly anyway for corn and wheat as such. And yeah, so it's moving into this sort of sold sort of area here. It's currently the 50% retracement level of this whole move that it's made up through here. And the 61.8 is down at the 150 here. Now, this move down through here, basically we're looking for 5 waves up here, and then we're looking for an A wave, a B wave, and a C wave here, and then up through here. Now, I could be wrong, and we could just, find support on 200 and continue to move up through there. If that's going to be the case, then we won't miss it because we'll get it at 200 anyway, but I'm just tracing out the bigger picture here. So we're looking for the low in here as well. So with that in mind, I think we could be quite close to it. I know this is a bit sort of rough looking here, but I was just looking at this here really as, look, I understand there's different ways you can count this, but this is the best I can come up with at the moment, and this is down for 1 here in 5 waves. That's pretty clear here. Wave 2 back sharp, 61.8 back to supply. And then I've got this here as down for 1 here, back for 2 here, and all the third wave here. So this would be 1, 2, 3, 4 and 5 for the third wave, back for the fourth, and then this is the little fifth wave in through here to make the third. It just doesn't look right though. This is one of my problems. The fourth, this fifth wave here looks fine here because we've got 1, 2, 3, 4, and 5 here. So in fact, this little picture here is a reasonable sort of carbon copy of this bigger picture here. Anyway, we'll see how we go. One of the things here, of course, is that the little move that we've had up through here appears to be impulsive. It appears to be in 5 waves. I need to do some work on it. 172 is an important level, as you can see. It was support, then it became resistance. So if it becomes support this time, then we know that we've got a bit of a turn in the market. So support on 172, you could glean one position, and a bit risky, but in the hope of looking for support on 180 to add to the position here and looking to work higher from that point there. Markets tend to reflect each other reflect itself in a trend. So you know, this moved down fast here, so this moved back up fast here, so the corrective pattern across here, move reasonably swiftly to here, be sold off here, come back to here, and then move up again. Pretty much a mirror image of this here. So if you took this here and sort of laid it back over this side, you know, flipped it over here, that's what the picture would be looking like here. So a bit of a rough journey to the upside here as such. You can see that because yesterday we were looking for wave 5 to come down even a bit lower, but it seems to have sort of you know, down for 1, 2, 3, 4, and 5, got all squashed up into the 165 area, the lower level of group 2. So this is an impulse wave here. It may not be finished. We may be in a wave 4 fluctuating here, but we don't have any overlapping wave structures. It's moving swiftly and nicely. So you know, some type of pullback in here, which could pull back to the 168 area here, 61.8 at a guess. But look, we're just eventually looking for a nice solid retested support on 172 here. Now, I wouldn't jump in early because this move back here can just fail from here and move down. So we really want a nice support on this area here. So it's kind of looking good really, because we have to remember that the weekly is over sold as well. So this might be the first little glimpse of some type of you know, corrective pattern finishing here. So you're really looking for some sort of reference point here that you can work with, you know, to the upside. All right. The sugar market, right, just on the 1 hour here. We thought that this may have been a low in place here, but then we've made another low here, so that's not the case. But this move down through here, as you can see, is in a possible 3 waves. So it's possible that this could be the A wave because it looks a bit impulsive, an A wave, a B wave in 3, and a C wave back up to here and then down. Okay, so look, we're not going to say or do anything here at all. If the 1730 becomes a retested support, yes, we'll go long from that point. We don't even want to go short because we know that the 1650, the medium level here, will also be offering support as well. So we just need it to mature, and then we need it to come out of its shell, out of its pattern, and then we can pick up the thread from there. So in the bigger picture, if the 1650 becomes the retested resistance, we're going to short. If the 1730 becomes the support, we're going to go long. It's as simple as that. So we may be able to pick it up earlier. We just need it to mature in this space here. The orange juice is on track. So we were looking yesterday, we were looking for a wave 3 high here. We were looking at 5 waves building up in through to here, the 3rd, the 4th, and the 5th here. We were looking for a 38.2 retracement level, which comes in at, let's move to a smaller chart here. Okay, it comes in at this level. So this is the 38.2 retracement level sitting on this little area through here. So it's just pretty much all on track. This sharp move down through to here. Look, as it may even come lower through here to the 160, but as long as the 160 does not become the retested resistance, then we're going to stay with this wave 4 being in play here. Okay, and once that's sort of done and dusted, we'll see that move higher through there. The only other situation that I can see here that would be an alternative count would be that this being, you know, the A, B, and C to here, but this could be an A wave, could be a B wave to here, and 5 waves for the C wave here, and then a move up. So that's why that 160 is important. But otherwise, we'll just stay with this 1, 2, 3, 4, and 5 up to the 170 area here. Okay, just a quick look at the US dollar while we're here. Just the 4-hour chart. We normally have a look at it on a smaller chart, but the main points here are that, yes, we do have a count that can have this high in through here. But I just don't have any evidence of a turn. So being above 80 is positive, being above 80.30 is positive, being above 80.50 is positive, being above 80.72 is positive. So, you know, we don't have a turn in the market as such yet. We have no evidence. We have no 5-wave structure to the downside yet. So there's still going to be, you know, pressure on commodities being traded in US dollars. So that's pretty much all of them. So, yeah. So still, we don't, you know, we're not into, we're still in basically selling mode. We are looking for lows. Yeah, we just don't have all the sort of ducks are not lined up, so to speak. Alrighty, thanks for listening.